Apple's third quarter saw lower iPhone sales, but that was offset by service revenue, wearables, and iPad beating revenue expectations. iPhone sales are expected to pick up with the release of version 16, incorporating artificial intelligence. iCloud, Apple Pay, and Apple TV as part of the service segment beat expectations, making for the possibility of accelerating revenue in Q4 and the Christmas quarter. Revenue was the highest third quarter to date at $85.8 billion, down 5.5% sequentially, but up 5% from Q3 2023. Gross margins remained strong at 46.3%, slightly lower quarterly, but up 4% annually. Operating profit was more than $25 billion, lower by 9% from last quarter, but up 10% yearly. This is an operating margin of 29.6%. Net income was $21.4 billion, again lower sequentially, but up 8% from Q3 2023. Net profit margin is 25%. Looking at Apple's quarterly income statement revenue, we can see how cyclical their revenue is. Net revenue has been growing by 37 basis points in the last 9 quarters, gross profit by 112 basis points, operating profit by 105, and net income 110 basis points. Apple continues to improve. Let's look at Apple's revenue by business unit. iPhone in blue generated $39.3 billion, or 45.8% of revenue. This is down 14.5% sequentially and 94 basis points from Q3 2023. Growth in the last 9 quarters has been lower by 38 basis points as their flagship product struggles. iPhone 16 release should help boost the segment in the coming quarters, however. Services in orange, one of the bright spots of the earnings report, continues to grow, earning a record $24.2 billion, or 28.2% of total. That's up 1.5% quarterly and 14% annually. Growth since Q3 2022 has been 2.4%. The earnings call revealed that there are more than 1 billion paid subscriptions in services. The green area represents wearables, home, and accessories, which was up 2.3% quarter over quarter, but down 2.3% year over year, earning slightly more than $8 billion and 9.4% of sales. Overall growth has been flat. iPad in yellow has been performing well since the new iPad Pro and Air launch. Sales jumped to more than $7.1 billion, up 29% sequentially and 24% year on year, though overall growth has been flat. This segment represents 8.3% of revenue. The Mac segment continues to struggle, posting $7 billion shown in red, or 8.2% of total sales. It was down 6% from last quarter, but up 2.5% from last year, but has been contracting by 57 basis points in the last 9 quarters. Revenue by geography for Apple shows the Americas in blue as the biggest market and the only one that grew this quarter, earning $37.7 billion. That is 43.9% overall. Americas was also up year over year by 6.5%, but with no growth since Q3 2022. Europe, shown in red, is the second largest, generating less than $22 billion, down by over 9% from last quarter, though up 8.3% from last year. Overall revenue expansion is 1.4%. Yellow is the Greater China geography, posting $14.7 billion, down over 10% and 6.5% respectively. The earnings call indicated that foreign exchange was partly to blame for the lower revenue. Japan in green is Apple's smallest market, representing 5.9% of sales. They reported just over $5 billion, down 18.6% quarterly, but up 5.7% annually. Sales overall were trending lower by 73 basis points. APAC at $6.4 billion, or 7.4% of revenue, was down 5% sequentially, but up 13.5% year over year. Growth in that market has been just 43 basis points overall. Let's see what the fundamental valuations show. Earnings per share was $1.40, beating expected of $1.34. Apple's PE is 33.2 compared to the S&P 500 at 28.46. The PEG ratio is negative 1.42. Sales per share were $25.12, giving us a price multiple of 8.7. Book value is $4.35. Apple has a relatively low shareholder equity. The company trades at a 50 multiple. Cash per share is $1.67. If you include marketable securities, that jumps to $4.03 per share. Apple also has $91 billion in long-term investments. Price to cash ratio is 131 or 54. The debt ratio is 0.21 and debt to equity is 1.34. Apple is carrying more than $86 billion in debt on the balance sheet, though that is down $5 billion from last quarter. Apple's current ratio is 0.95, quick ratio is 0.64, and cash ratio is 0.19. Return on assets were an impressive 31%, and return on equity was 152%. Return on capital employed was 60%, and return on invested capital 62%. Apple's cash flow is no slouch either. Operating cash flow at 91 billion, investing inflow was 1.5 billion, and financing outflow was 97 billion. They bought 70 billion worth of common stock last quarter. Free cash flow to the firm is 85 billion, or a 39.5 multiple to price. Apple paid a 25-cent dividend, yielding 46 basis points and growing at 3.8%. This is a payout ratio of 18.2%. Apple's enterprise value is 3.4 trillion. This gives us a 9 times multiple to revenue, 26.4 times EBITDA, 28 times EBIT, and 40 multiple to free cash flow. Apple provided guidance in the earnings call, expecting revenue to grow by the same amount year over year as this quarter, or about 4.9%. Gross margins are expected to come in at between 45 and 46.5%. Operating expenses around 14.3 billion. They gave 16.5% as the tax rate, where we arrived at an earnings per share of $1.57, or a forward PE of 33. Key takeaways from the report: on the pro side, the revenue was good, growing year over year. Margins continue to be strong. They have a lot of cash and great cash flow. The services segment, as a high margin business, continues to grow along with iPad and wearables. They lowered their debt. On the con side, the multiples seem rather high, but a premium stock commands a premium price. They are putting their hopes into iPhone 16 launch. How well will it be received? Foreign exchange is expected to cost 1.5% of revenue going forward. We give Apple a neutral rating. We see services revenue expanding, but the iPhone 16 is the wild card. We have no exposure to this company. Like and subscribe.